Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Kristin Lee, and joining me are my co-hosts, CoinDesk Managing Editor of Global Capital Markets, Lawrence Lewitton, and Managing Director of International Content, Emily Parker. Good morning, Emily. Good morning, Lawrence.
Good morning.
Morning.
Good
to see you.
Look at them prices.
Look at those prices. Let's check in on Bitcoin. The CoinDesk Bitcoin price XVX index currently trading at $64,330, inching toward that all-time high of $64,888 or $89 or so. But Bitcoin is up about 3.5% over the past 24 hours. And the CoinDesk Ether price ETX index is at 39.40. ETH up about 3.7% for the day. And the new DFX CoinDesk DeFi index is over that $600 threshold, 607, up almost 2% for the day. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as a leader in crypto news, events, and data. So Bitcoin is running toward that all-time high. $1 billion of trading volume on the ProShares ETF, Bitcoin futures ETF yesterday, obviously driving the crypto markets up, the second most heavily traded new ETF on record, and according to Bloomberg. And the fund's closing price was almost 5% up from the initial $40 net asset value. So incredible debut, guys.
Yeah, this isn't something to sneeze at. People like the Bitcoins.
People like the Bitcoins, Emily.
They Bitcoins, and you should see the action on the options market too. Is pretty. This is like one of the highest days. It was like $14 billion in open interest, according to our colleague Omkar Godbole. He wrote about it. So yeah, people love them Bitcoins.
Emily.
Yeah. Well, it's interesting because we spend so much time on the show trying to decipher what's driving Bitcoin's price. And most of the time, it's anybody's guess. This time, it's pretty clear what is driving this price rise, right? And a lot of it is the narrative. And it's this idea that, okay, Bitcoin is going mainstream and this is a friendly regulatory signal. So I think the question is, though, not to be just to put some, cold water on this, but like what will happen going forward? Because clearly there's a lot of hype and a lot of froth right now. And so, can this last? That's what I'm going to be watching out for.
All right.
To Emily's point, this is kind of a great thing because this is something that, not a great thing, but this is something where we could say, the interest here today, at least in the past 24 hours, it came from North America. It came through dollars and not necessarily other stable coins. So, this is definitely a watershed moment. Exciting.
Indeed. All right. Let's dive further with our crypto markets guest.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
All right. Joining us now to discuss all this crypto market activity is Alex Thorn, head of research at Galaxy Digital. Hi there, Alex. Great to have you on the show. So do you see Bitcoin hitting that all-time high potentially today?
Yeah, I think it's definitely possible. There's been a lot of market forces pushing Bitcoin up. It's not just the ETF, by the way, although I absolutely agree that's been a bullish a bullish force on the market. But yeah, I mean, I was hoping to see it yesterday, but still just really happy that the market has matured to the point where you have such a diverse range of options to gain exposure to Bitcoin, whether it's, lifeboat freedom money that you keep on a hardware wallet or something that you can keep in your brokerage
Alex, you
account.
say it's not just the ProShares Bitcoin's futures ETF. Then what is it? And Lawrence alluded to stable coins and the markets in Asia as giving it a boost.
Well, one thing we noticed, we put out a report yesterday, 10 things that show crypto is booming. And one of the things we've been watching is 5-year break-even yields. Bitcoin's been running almost in tandem, almost at a perfect correlation with the inflation expectations for about 30 days. We see it as operating almost as a gold-like instrument in the market that still serves as a risk asset. So at the same time as this correlation appeared, we saw the NASDAQ and the S&P also start to rebound and are just slightly off their all-time highs now as well. So you're sort of in a risk-on environment with an inflation expectation. Gold has been floundering, and yet Bitcoin has been moving directly in lockstep with inflation expectations. So it's kind of a perfect storm for Bitcoin, I think, as a macro asset right now.
Hey, Alex, yesterday was day one, and it was the first ETF. We have a whole bunch coming up this week. What do you think what do you think will happen there? How will those guys do?
Honestly, it's hard to know. The first movers clearly has a lot of hype. There's obviously a ton of demand. You guys pointed out that Bloomberg reported this was the second largest ETF debut in history. It may even be the first by some measures. Look, I think just more people with more options and competition in a market is always good.
So one of the reports I've seen is like that there's been a lot of this interest in the futures ETF has come from retail investors. But I guess maybe it would be interesting if you could spell out for me this kind of narrative that, okay, it's so much easier to get into a Bitcoin futures ETF than like set up an account at like Coinbase or Kraken. I don't really totally get that. Like, why is it so much easier to get into this ETF than it would be just to trade crypto normally? Can you just spell that out? Because it's a little bit bewildering to me.
Yeah, I mean, I think for a sophisticated young retail investor, it's not difficult to gain access to Bitcoin or cryptocurrency exposure today through crypto exchanges and other platforms that already exist. But for the large swaths of investment advisors and retail users who don't have experience outside of their existing brokerage platforms, and also for those who want to own instruments like this inside IRA accounts, so retirement accounts, I think this is still a huge, a great option for them. It's, I think we'll see more market access vehicles like this I'm in awe of the range of methods we have now to gain access. Just a couple of years ago, right? I was thinking back to 2017, there was a few onshore exchanges, right? Just a couple that you could really access. Almost no market infrastructure, no connectivity to the traditional financial world. And today you have literally on the New York Stock Exchange down the street from me here in New York, a Bitcoin ETF trading makes it very easy for people to access.
So just to pivot slightly, talking about things that are easy for people to access, I understand that you have some knowledge of meme coins, specifically Sheepcoin. I know that you've written about Dogecoin before, but Sheepcoin is now, this really hot coin that many people take even less seriously than Doge. But can you just explain a little bit the phenomenon behind this? Someone told me that for people in China, for example, a lot of people, this is the first coin they buy. Like, what's going on here? Like, is there anything really behind Sheepcoin? Why does it have legs? I mean, so to speak, like what?
Yeah, I mean,
just anything you could tell us about this.
I don't bet in this market in particular. I don't bet against, funny meme coins. And I think Dogecoin really is that like dog themed token to rule the world. So, but the thing about Sheep that I think is interesting, if anything, is that you can access DeFi with Sheep. Dogecoin is on its own proof of work chain. It's not really well represented in DeFi ecosystems, but with something like Sheep, if you're interested in it and you're, operating on chain, you can there's a lot you can do with it that you can't do with the Dogecoin. But in general, I think the meme coins are really sort of a sign of the beauty of community on the internet in a lot of ways. You've got we now have these financial methods to and make our own money methods to express our community with each other, and that yields some pretty funny things. And to me, I don't read too much past it beyond that.
When you wrote that Dogecoin report in May, it was quite, in depth in terms of, talking about the team. It was created as a joke. The supply scale was forever. And yeah. I wonder, when comparing that with Sheep, do you have an understanding of, what is the team behind them? What is the supply there? And why do we need another Shiba Inu themed coin?
I'm not sure that we do. We haven't done, to be clear, a deep analysis of Shiba Inu coin. And because it doesn't have its own blockchain, a lot of that analysis is going to not be relevant in that comparison. The stuff we did about Doge, I think the most salient information we pulled was about the resilience of the blockchain itself and nodes on the network. I think Sheep, to me, is another token, and you can spin these things up like crazy. And look, I mean, you can build a community around it. I mean, that's really how I view this almost exclusively is, we could create Alex token if enough people like it. Like, who knows? Would I be surprised? I don't know. Shiba Inus are great dogs.
Alex, you say that we don't need another dog-themed coin, but I can tell you this: a Shih Tzu coin would do really well with the entas at the mahjong table. So, just beware that could be next. One of the charts you had was a Bitcoin dominance chart showing that Bitcoin's dominance has actually risen over the past few weeks. Does that tell us that the peak in the alts and things like meme coins, is that behind us now with Bitcoin taking dominance?
It's a good question. It is kind of what I think in the near term. I wouldn't say the peak is behind us, but these things are so cyclical. We know that Bitcoin, its previous all-time high was in April, and then ETH was shortly thereafter. And then we sort of went through a period where DeFi ran really well, and then NFTs, and then all layer ones. And folks were, active traders were sort of cycling and rotating their portfolios there. And we knew that a few weeks ago, we started to see that some investors were telling us that they were structurally underweight Bitcoin, right? And so I think that's where you start to see, with Bitcoin, like I said, tracking inflation expectations moving up over the last 30 days. You can also see, I think, it retaking some market share when you look at the market dominance, the Bitcoin dominance chart. And so I do think it's likely that, this fall feels like a Bitcoin fall to me. I mean, like all of these bull runs in crypto, there'll be probably more rotations. But Bitcoin, it feels like all hail the king right now with Bitcoin.
It's interesting that you say Shibas are nice dogs. My understanding of them is that they're quite cute, but then they can be very difficult once you bring them home. So I don't know if there's like a metaphor there. But anyway, that's a topic for another show. Just back to Bitcoin for a second. There are some critics of this ETF, right? And one of the criticisms out there is that, people aren't actually buying Bitcoin itself. They're buying futures contracts. And could this in a strange way actually bring some people who would have gotten into the spot market out of the market and into the futures market? Do you see what I'm saying? So right now the price rise is very much tied to this narrative and to this symbolism. But over the long term, is it actually good for Bitcoin? There are some people out there who think that it's maybe not.
Yeah, I mean, I think it definitely is good for Bitcoin. To be clear, I'm on that side. Net overall positive, mostly because you have many ways to express your interest in this asset. And like I said, I can use a self-custody multi-sig setup that I set up my own Bitcoin, right, where you can't ever get any of it. But I also have these other accounts. You might want ways to express it. We'd love to see a range of competitive fund products that have different structures. I think everyone would, and I think we will. So, I mean, in terms of a cash settled futures based ETF, there are pros and cons and interesting things about this vehicle, like there are others. But I think it's very clear that people just want exposure. We're going to see a lot of interest, and I don't think this dampens interest for actual Bitcoin. I think it's more, I think people who know, and more people than ever before, and a growing number of people worldwide know about Bitcoin, really know about it. A lot of them want to own real Bitcoin and store it. Learn about things like running their own node and self-custody. But there's plenty of those same people also want these other vehicles, right? And let alone all the others.
I wonder what is behind SEC Chair Gary Gensler's hesitancy to approve a Bitcoin spot ETF, or is a physical Bitcoin ETF on the horizon?
Well, it's hard to know exactly the timing, any kind of timing. I'm still confident that we'll see one eventually. I think part of Chairman Gensler, and this is what he said, was that because the futures are carried on CME, which has a clear regulatory regime, that I think that's where their comfort level comes from. You look at the other actions that he's taken and some of the proposals that have been made. He clearly thinks that the cryptocurrency exchange market needs additional regulation, and perhaps that's a reason for the delay, but I can't speculate beyond that.
Does he need more authority to request more oversight from Congress?
That's what he's asked for. Okay. I don't know if he does or not, and I don't want to comment too much on this, but if you go back and review the record, he's been in discussions with U.S. senators, right? Both via letter and correspondence, but also in appearances before the Senate discussing this.
Very cautious approach. All right, Alex, thank you so much for joining us. That was Galaxy Digital Head of Research, Alex Thorne. Coming up, we'll check in on Asia and a CoinDesk investigative report about the black market for verified user accounts on major crypto exchanges. Time Time now for the daily forecast, an update on what's happening in the Asia crypto markets. Here's Angie Lau of Forecast News.
Welcome to the Daily Forecast, October 20th, 2021. I'm Angie Lau, Editor-in-Chief of Forecast News, covering all things blockchain. Well, the first Bitcoin futures ETF in the U.S. had a spectacular opening on the New York Stock Exchange on Tuesday, with around $280 million US dollars worth of shares in ProShares Bitcoin Strategy ETF traded within 20 minutes. We're going to take a look at what's next on the ETF agenda and a whole lot more coming up. Let's get you up to speed from Asia to the world. First up, ProShares ETF knockout opening continued in that same fashion, with trading volume approaching $1 billion US dollars by the end of the day. And eager to get on the bandwagon, Grayscale Investments filed with the Securities and Exchange Commission to convert its Bitcoin trust into a Bitcoin spot ETF amid a turbo boost to the industry from these ETF developments. As of the time of this recording, Bitcoin inches ever closer to an all-time high. Forecast News' Monica Ghosh has more.
ProShares Bitcoin Strategy ETF went live on the New York Stock Exchange under the ticker BITO. But one expert told Forecast News that as the ETF will only trade for the 7 hours per day that the New York Stock Exchange operates, it has limitations.
It doesn't allow investors to capitalize on those big moves that occur outside of exchange trading hours, or alternatively stop out of positions, which to me is a very important part of trading, whether you're trading digital assets or you're trading conventional equities.
All of this has set Bitcoin's price on a tear, hovering within 2% of its all-time high. The price was at just under $64,000 US dollars Wednesday, midday Asia time. Jonathan Miller of Kraken says a combination of factors have benefited the cryptocurrency this year.
More general awareness, security, easier pathways onto crypto. It's a confluence of things, and that's why, that's why we're here today.
For Forecast News, I'm Monica Ghosh.
Meanwhile, an Australian Bitcoin trader dumped by his banks is continuing to raise a ruckus. Alan Flynn is forging forward with his crusade against being debanked because of his occupation as a trader of Bitcoins. Having been debanked around 20 times, Flynn decided to do something about it, and using anti-discrimination laws that only apply in Australia's capital territory, he has already settled a case with ANZ Bank. Westpac is next on his list. Forecast News' Lachlan Keller has more from the man and the saga from Melbourne, Australia.
Alan Flynn started Canberra Bitcoin, offering managed transactions on an escrow platform in July 2017. But he ceased operations in December 2019 as his bank accounts kept being shut down despite his business being lawful. Tired of the hassle and customers losing trust in him, he set out to find a solution. That appeared in the form of the ACT's 1991 Discrimination Act, which considers a profession to be a protected attribute unless discrimination is reasonable under the circumstances. Flynn settled his case with ANZ before it went to tribunal, and his hearing with Westpac is set to begin on Thursday. Debanking's also on the agenda for the Australian Senate Select Committee's inquiry into fintech regulation. But Flynn told Forecast News that while he was heartened by Senator Andrew Bragg saying policy will be implemented, he is cynical over what it will achieve.
We're 6 years down the track. Debanking is still an issue. I'm beginning to wonder whether, it ever really will be addressed. So meanwhile, I'm not holding my breath for politicians to do anything. This is why I'm taking action myself. I've got this law supporting me. I'm going to use it.
For Forecast News, I'm Lachlan Keller from Melbourne, Australia.
And finally, we started the show talking Bitcoin approaching another high. Well, as we end this report, Bitcoin is in another respect also hitting a high in mining difficulty. In fact, Bitcoin mining difficulty has hit its highest level since the May 30th adjustment. According to data from BTC.com, Tuesday's adjustment saw the Bitcoin mining difficulty increase by 0.95%, close to 1% there. The difficulty level saw 4 consecutive declines immediately after China intensified its clampdown on the sector in May. Remember that? But this is the 7th increase in a row since then. Those ripples from China's clampdown still not showing much of a sign of slowing down. It just means miners are popping up somewhere else in the world. And that's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Editor-in-Chief Angie Lau. Until the next time.
Checking in on Bitcoin, the CoinDesk Bitcoin price XBX index currently trading at $64,330. Bitcoin is up about 2.7% over the past 24 hours, and the CoinDesk Ether price ETX index is at 39.38. ETH jumping ahead 3.7%, and the new DFX CoinDesk DeFi index is at 608, also making an advance of about 1.9%. Meanwhile, a CoinDesk investigation finding a black market is flourishing for verified user accounts on major exchanges, including Coinbase Pro and Binance US. For just $200, you can trade crypto with a fake ID. Leading this report is CoinDesk reporter Anna Baydakova in Moscow. Welcome to the show, Anna. Great to see you. So, diving into this report, who is buying these services? Who's being targeted? And how big is this market?
Well, this is a big question, and obviously there are no, proven answers to that. Obviously, people who want to cover their tracks when they deal with crypto, might find it nicely to buy it through a major exchange, but not to do it in their own name. But there is also an interesting use case for people in jurisdictions that are either sanctioned by the West or just having a very prohibitive crypto regulation like China. And this, let's call it service of accounts for sale, it looks like it's becoming popular in such jurisdictions because otherwise people just cannot register under their own name on the major trading platforms.
So, Anna, are there people out there who are voluntarily selling their own personal data for other people to use? And if so, who are they? Why are they doing this to themselves?
That's another great question. Unfortunately, I couldn't find a single volunteer who willingly sold their identity and would be willing to talk to me. But according to a cybersecurity expert, I talked to a cybersecurity expert from the ZeroFox cybersecurity firm. And he said they'll be watching this market for quite a long time. And actually, these accounts for sale can come either from people who willingly registered them in their own name and then sold them to other people. Or they can be like completely synthetic. So, these, again, vendors, let's call them this way, they use either stolen or leaked data, or they just, generate names and addresses and whatnot, and they go through the verification process themselves. So then they have this synthetic account that actually, nobody sold their identity for that, but maybe somebody's identity was used.
Anna, congratulations on this story. I know you've been working on it for a really long time. It's super ambitious, so congratulations. So I just want to ask you a little bit about your experience of writing this story. What was the hardest part? I mean, I imagine there were so many difficult, moments here, but for you, what was the most difficult part of reporting this story?
Probably the most puzzling part was that once I discovered that such an industry of accounts for sale exists, I started to see if anybody noticed it. Except me, although some people would tell you this has been going on for years. It's not even used. You just notice it now. But I've been talking to multiple cybersecurity firms and experts, and nobody could really provide any observations about that. Like in traditional finance, the phenomenon of money mules who kind of lend their bank accounts to other people is quite a well-known fact. But it looks that it's not that well-known that it also happening in crypto.
So any of the exchanges or employees of exchanges involved in this, have you been able to find out whether or not there have been, let's say, inside jobs of employees? And and also, have the exchanges reached out to you since this story was published? I know it's just been a few minutes, so to speak, but have you heard any feedback from the exchanges or authorities?
Well, from exchanges, sure. We requested comments from a bunch of exchanges and the payment apps like Cash App, TransferWise, Revolut, and Wirex, which are also on this market, the apps through which you can trade both fiat and crypto. And they said that some of them said they know this thing exists and they're trying to locate and shut down such accounts. Some just said that, we have a good KYC policy and we're fighting fraud as well as we can.
Do we know if anybody inside the exchanges are involved in these kind of black market stuff?
My story does not provide such an answer. You would imagine it's maybe possible, but my guess would be that people who are selling accounts are acting on their own, and the exchanges, in most cases, just don't know what's happening.
Well, it's an interesting read. You could find it on CoinDesk.com. Anna, thanks for joining us, and congratulations on this great report. That was CoinDesk reporter Anna Baydakova. Coming up, is partisan politics starting to bleed into crypto? Plus, we'll check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day.
The new infrastructure deal, we thought it was going to just be about choo-choos and fixing roads. Turns out there's a whole thing about crypto in there.
Basically, they're hoping to raise $28 billion by, to help fund other aspects of the bill. And the expanded definitions seem to, be the main cause for concern amongst a lot of the folks in the industry.
For this new innovation that we not apply 90-year-old statutes, which is effectively what we have.
We've been talking about it for a number of days. This is a subject that very few members of the Senate know about.
I think there are a lot of others at the SEC who do understand the technology quite well.
Every time we take a step forward to regulatory clarity, what we see is market movement.
Welcome back. Time to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk's The State of Crypto newsletter. Good morning, Nick. So I just see you have an article out that the Chicago Board Options Exchange, the CBOE, is acquiring a crypto spot and derivatives marketplace, ErisX. Tell us all about it.
Good morning. Yeah, CBOE announced this morning that it would acquire ErisX, and I spoke to executives from both companies, and they say that this is basically giving ErisX some ability to further build out and expand its Bitcoin and Ether futures products, while renaming the company as CBOE Digital. And basically, it's going to happen over the next 4 to 6 months. They have to obviously talk to some 40-some regulators to get approval, but CBOE, you may recall, had Bitcoin futures way back in the end of 2017, beginning of 2018, and shuttered, I think, around mid-2019. So this is all, this seems like CBOE is re-entering the crypto futures market by acquiring a firm that has, launched these products over the last 2 years.
I'm going to ask you about Facebook, but you think that's FOMO on the part of the CBOE? You think that they kind of blew it with that first futures, and they're seeing the success over at CME, and now they want to get back in, or is it mentality change?
Well, so CBOE Chief Operating Officer Chris Isaacson said that CBOE iterates on its products, and he doesn't think, in his words, the first iteration of their Bitcoin futures, which was a cash settled product, may not have been the best model. ErisX offers physically settled products, so this is actually not necessarily a direct competitor to CME. Really, what they're doing is they're competing with companies like Bakkt, which also offer physically settled Bitcoin futures.
So there was that thing I just mentioned earlier, Facebook and Paxos. They're getting a little heat from members of the Senate. What's the issue, and do you think that that it'll keep going on with the president's working group working on its stablecoin report? Do you think that that's sort of are those two issues tied together?
Yeah. So yesterday, Facebook announced that it was launching its Novi wallet with Paxos and Coinbase custody, and a group of Democratic lawmakers, senators specifically, wrote a public letter saying, we were assured by Mark Zuckerberg and David Marcus at Facebook that nothing would launch until regulators have granted their approval, and that hasn't happened yet. And they basically told Facebook to stop its pilot program, to commit to not bringing Diem to market, and basically put a hold on everything until presumably regulators come out with a firm, we are cool with this. We think it's heavily regulated. We are okay with the, investor protection concerns or the financial stability concerns that were previously expressed. Facebook, for its part, says that they look forward to responding. They have not given a timeline yet for when they might do so. But this is basically the same or very similar issues to what we heard back in 2019. Facebook announced Libra at the time, and regulators and lawmakers said, we have very serious concerns about how this might, be used, how people might be impacted by, both on a financial stability level as well as on a consumer protection level. And yesterday's letter even pointed to concerns about Facebook's ability to protect customer data.
Interesting. Facebook certainly wants that stablecoin. All right. Thanks for the update, Nick. That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
It's Policy Week at CoinDesk, and we ask, is crypto becoming a partisan issue in the United States? Our next guest has written a CoinDesk article on why she believes attempts to label crypto as red or blue are missing the point. Joining us now to discuss why crypto is too big for partisan politics is Kristin Smith, Executive Director of the Blockchain Association. Hello there, Kristin. So in your article, you noted that Politico had mentioned that Republicans have urged SEC Chair Gary Gensler to go easy touch on crypto innovation last week, while Democrats seem to want a stricter approach toward regulation. And at the same time, a bipartisan group of senators tried to get an infrastructure bill amendment passed. So how partisan is crypto?
I actually think it's more bipartisan than partisan. And the reason for that is that the users of crypto, the investors in crypto, the people contributing to crypto markets come from all parts of the globe, all parts of the country, both ends of the political spectrum. And because we have this very powerful community, that is what policymakers are ultimately going to need to respond to. And so while we may see moments where Republicans might seem a little more engaged than Democrats, I think that has largely passed. We're getting more Democrats excited about this space. And going forward, as more and more people continue to use crypto, I think we're going to have a good political environment to end up getting the right policy that we need for the crypto community to keep growing.
Well, crypto will need all the allies it can get. I'm just taking a look at Galaxy Digital Research's chart, which shows a breakdown of support in the U.S. Senate for digital assets, and it doesn't look so great. If you see here, blue means pro-digital, gray is neutral, red is against crypto in the U.S. Senate, which dominates about 3/4 of the chart. Does that seem accurate to you and a bit concerning?
Yeah, listen, I mean, obviously that's not a trend that we want to continue to see, but I think, these are complex issues. It takes a long time for members of Congress to fully wrap their head around the fact that, crypto isn't just the future of money, it's the future of everything. And it's going to solve a lot of other public policy problems we have with large internet platforms that are, sort of pushing their monopoly power out onto consumers. Crypto networks break that cycle. And so I think that as the innovation continues, as more and more people get involved, what we're seeing right now on the Hill is a tremendous interest from Democratic offices that want to learn, that previously didn't really care to engage. And so I think this might be accurate where we are today, but just based off the conversations our team has been having in in the past couple weeks and months. Like there is a shift that's happening, and I'm optimistic that we will end up having one of the truly bipartisan issues, or nonpartisan issues, I should say, that the Congress is going to be grappling with in the years ahead.
So we have to return to this topic of the infrastructure bill, which I think is what we were talking about last time you were on the show. There was a lot of fear about this crypto tax provision. That language is still there, right? I mean, we don't know what's happening with the infrastructure bill, but the language that the crypto industry urgently wanted to change has not been changed. So what is your forecast for this? I mean, do you think that language is just going to stay? And if so, how big a deal is that?
Yeah, the problem with language getting tucked into a must-pass bill is it's very hard to pull it out, which is why we pushed so hard in August to try to get the language changed in the infrastructure bill. There's no opportunity based off the way they set up the rules in the House to do any amendments to the infrastructure bill in the House. The problem with the infrastructure bill right now is that it's caught up in broader party politics around should there be a large social spending package known as a reconciliation bill, or should there just be the infrastructure? And so it's unclear really to anyone in Washington right now what the pathway forward is for the broader bill. But if it does get enacted, I think that we have a tremendous amount of support within members of Congress to either go back and change the provision legislatively, or, put pressure on the IRS to make sure that they keep the broker definition to firms that are actually brokers. Like everybody wants Coinbase to send them a 1099 at the end of the year. Nobody wants a software developer to have to go around asking for a bunch of personally identifiable information so that they would have to comply. So I'm optimistic that we'll be able to work with the IRS, but it's definitely something we want to keep an eye on. It's definitely something we want to ultimately have fixed, but I'm confident that in the short run, we'll be able to manage the issue and prevent anything, truly overreaching from happening.
Kristin, I kind of want to get back to your previous statement that crypto is a bipartisan issue, but isn't ultimately its kind of libertarian ethos a reason why it would find a natural home, let's say, in the Republican Party versus Democratic Party, which generally has a interest in having government grow and government spending grow and some political control over the money supply?
I mean, I think when I speak with Democrats, they care about a lot of things, right? They care about U.S. competitiveness vis-a-vis China. They care about financial inclusion and trying to figure out ways to provide better services. They care about systems that don't discriminate against people. And crypto helps with all of that. Crypto are solutions to these problems. And it's early stage, right? Like this is not something that every single person is out there using every day in order to have better financial services, but that's okay. Rome wasn't built in a day. We have to allow time for experimentation to take place, for developers to do work, for there to be tests and trials and errors. And that's part of the process. But what these crypto networks are today is going to be the foundation for so many services in the future. And we need to let that work be done. And ultimately, more and more people will use applications that are based on crypto networks. It's not going to be just buying and selling Dogecoin for, the entertainment value of it. It's really going to be services that change our lives, that reduce costs and empower people at the edges of the network to have opportunities they otherwise wouldn't have.
All right. Well, Kristin Smith, fighting the good fight down in D.C. Thanks for taking the time to join us this morning. That was Blockchain Association Executive Director Kristin Smith, who has written her article as part of Policy Week at CoinDesk. You can find it on CoinDesk.com. All week long coverage of CoinDesk will focus on the crypto industry's reckoning with regulation. Time now to check in with Crypto Twitter with our tweet of the day. This one from Tyler Winklevoss, when the co-CEO of Gemini, tweeting out that when Cameron and I, his brother, first proposed a Bitcoin ETF in July of 2013, the price of Bitcoin was $68. Today, upon the launch of 2 Bitcoin futures ETFs, the price of Bitcoin is about $64,000. That's almost 1,000 times return in the meantime. I'm glad we got here, but it has taken too long. Some perspective on the fight for getting an ETF approved by the SEC. That's it for First Mover. Thank you, Emily Parker and Lawrence Lewiton. I'm your host, Kristin Lee. I'll be back live at 3 p.m. with all about Bitcoin. Coming up noon are the folks at The Hash. You're watching CoinDesk TV.